The Earth may spin on its axis, but the world revolves around money. Populism, nationalism, isolationism, corruption, trade wars, military wars, health crises, inequality, economic hardship, and financial market bubbles, all of them are connected to money. Money doesn't just drive a wedge between different classes, races, genders, and countries. It is the wedge. In the 1920s, Charles Ponzi's name became synonymous with the big swindle. His con was no random event. Like any salesperson, con artist, or politician, he leveraged a unique feature of human nature, that in the end, we all want to be comfortable, secure, and in control of our destinies. That means different things to each of us, depending on our circumstances, backgrounds, financial ambitions, need for survival, or appetite for greed. What Ponzi did was use that basic desire and an unsettled environment to his advantage. In the year 1920, the United States was facing an economic depression, the aftermath of a brutal world war and a tragic global pandemic, the Spanish flu. People were tired, stressed, and eager to move on. On that canvas, Ponzi painted a get-rich-quick scheme that contained the perfect cocktail of credibility, mixed with enticing reasons to suspend judgment. The period in which he incited such extreme responses was a key component of his initial success. Today, we would call the enthusiasm Ponzi stirred up for his investment scheme, which involved buying international stamps for one price and selling them for more money to the U.S. postal system, the fear of missing out, or FOMO. Some of the folks in Boston who first bought into Ponzi's scheme were rich, while others were poor. Their optimism brought them together. Without the benefit of Twitter, Reddit, or the internet, a swath of disparate or desperate investors wanted to get in on his game. Equally, they wanted to believe in Ponzi's ability to make them richer. By duly paying the initial investors just as he promised, Ponzi successfully peddled the idea that he could make anyone a 50% return in 90 days. That was an enticing prospect, since banks were offering a mere 4% return over a full year. Plus, Ponzi, a once poor immigrant from Italy, had been denied a loan from the very bank, Hanover Trust Company, to which he funneled a large amount of his proceeds. He used that rejection as a marketing ploy. That rags to riches narrative gave him a David versus Goliath appeal that also embodied the essence of America's promise to its newcomers and downtrodden. It enhanced their belief in him and what he was offering. That faith was critical for his scam to work. To provide his customers with maximum confidence, every detail, down to the selection of the name for the company that would house his stamp swindle, was carefully considered to inspire trust. Indeed, that was the entire point. And as he later wrote, the Securities Exchange Company began its business career under the most favorable auspices. True, it had no capital, but it had no black eye either. In an irony for the ages, the acronym for the U.S. Securities and Exchange Commission, SEC, was identical to that of the company Ponzi crafted for his grift. The government body was established under the Securities Exchange Act of 1934. Its purpose was to protect the public from fraudulent claims by public firms, though this was not always accomplished with the greatest of success. Ponzi's motivation stemmed from a desire to call out Wall Street and beat it at its own game. Once he started, he kept going. He explained in his autobiography, "I knew what I was up against if I stopped. I knew not what I might run across if I kept on. I had unlimited confidence in luck, as well as my ability to exploit it. And on I went headlong like a bull in a china shop, to smash all precedents and principles of high finance as it was preached, but not practiced, in Wall Street."